You're welcome back. This is Newsfile, it's your most authoritative news analysis platform. And here on Newsfile, we put Ghana first. The country has signed a lithium mining agreement with a company, Barar DV Ghana Limited, that's supposed to be a subsidiary of the Atlantic company. But issues have arisen. And this was one of the first to bring the nation's attention to what could be a giveaway contract. Listen to Justice Sophia Kufu.
Do Ghana, you should be asking for more counterpart in do because it's yours. It doesn't belong to the Minerals Commission. It doesn't belong to it doesn't belong to any individual. It needs to be of Ghana. If it's not in the area it stays, it's at the territory of Ghana, and it belongs to you. So I here wishes to advise Parliament to exercise caution and patience, secure a modern, best practice-based arrangement that will guarantee maximum benefit for the people of the Republic of Ghana, instead of the usual colonial type lease that benefits foreign companies masquerading as investors in their local cohorts. My view, my legal view, is that a transaction that requires ratification is not complete. It's incomplete. This is a document. It is signed and sealed and delivered. But because it is a deed which has to be ratified by a named authority, that is the Parliament of the Republic of Ghana, this process is incomplete. Anybody who allows this thing to end us in a judgment debt is a bad lawyer.
So last week we had Martin Kwekwesi, Chief Executive Officer of the Minerals Commission, here in the studio briefly debunking some of the claims and statements conclusive made by the IEA, on whose platform the former Chief Justice Sophia Kufu spoke. He's back here in the studio. Thank you very much for making time to join us, sir. Also joining us and right here in the studio is Dr. Kwabena Donko, MP, Pru East, and former Minister for Power. Professor Ransford Jampo, an indigene of Infantsman, where the lithium is located, and president of the Solpon Forum and Infantsman Youth Association, joins us also because he is already sending some warning that if a certain percentage is not procured, the people, the indigenes, have the benefit of some sort of a corporate social responsibility of 1%. He is suggesting that if certain things are not done, there will be an outright rejection, or the company will not be able to mine comfortably in the area. We have Bright Simmons, who also joined us last week. He's Honorary Vice President Timani Africa. We also have Edward Coranting, Chief Executive Officer, Minerals Income Investment Fund. He's been speaking about how important it is for us not to lose sight of the fact that Ghana has two people on the board of the subsidiary, and we have one on the Atlantic's the main company's board as well, and that should not be taken for granted. It's important. Atlantic Lithium Equity Investment. Right. So let me begin with Bright Simmons. This, once again, is a game changer. The myth announces to us that's the Minerals Income Investment Fund, announces to us that at the end of the cycle of 12, 15 years, they expect to rake in some 2.4 billion United States dollars. And I was just making a comparison with how much it is we are at the IMF to save this economy. When we had oil, we were told about how oil was going to change our lives. Here we are at the IMF begging for 3 billion. So tell us about from where you sit, how important is this lithium thing in our overall ambition to have an economy that we can be happy about?
That you raised, that money that was mentioned is over a 12-year period. So you have to think of it in those terms. But is it fine if in the beginning I give you kind of like a rough overview of the lithium sector itself before I delve into the specifics of Ghana?
Certainly.
So this is a very interesting mineral. It's the lightest metal known to man, at least from from the research that I've conducted. And it's long been called white gold because it's being perceived as one of the most important minerals going forward as we move into the energy transition. The concerns that we have in civil society in Ghana is that there's been a bit of a failure of imagination in the way that the policymakers and the duty bearers have addressed the opportunity. Before we go there, I just wanted to give you a very quick overview of lithium itself. This chemical was discovered in the 19th century, sometime around 1817. And for many years thereafter, until the middle of the 19th century, the middle of the 20th century, it was primarily a medical input. So particularly for bipolar and mania and depression and things like that. Over time, its use began to diversify quite dramatically. And in this millennium, we've seen a situation where it was split among a number of different sectors until eventually, the last 2 years or so, about 85% of the lithium supply in the world is used mostly for battery and various power-related applications. So essentially, it's used in the kind of batteries that you have in cars that are electric cars, for instance. And it's expected that by next year, about 90% of all the lithium mined in the world will go into EV cars, electric vehicles. So the way you think of it is like, okay, a lot of the people in the world are going to shift from combustion engines, the kind of cars that use petrol, and they're going to start using battery-powered cars, electric cars. And 90% of the lithium in the world will go into powering these cars. So if you're going to buy a car that is powered by a battery, it's likely that the lithium-ion battery in there will use lithium either from Ghana, Chile, or one of the countries that produces it. The other important thing is that because of the anticipation due to climate change and other factors, that electric vehicle usage will really explode. Lithium is one of those minerals that people believe will see the highest growth in demand. In fact, among a number of the key transition minerals, those minerals that will be very important to the green economy going forward, analysts suggest that that lithium will see the highest growth. The other point to note is that lithium is a fairly complex. Its chemistry is fairly complex, and there are different intermediate and end products that you make from lithium. And rarely are you using lithium itself. It's a highly reactive element. So usually we use it in its compounds, whether it's carbonate, hydroxide, or things like that. And that is important, and I'll make another point later on. And so it's important to bear that in mind as you do your analysis. The other thing that we also have to keep in mind is that as you refine it upwards, you do improve on the value add. So as you move it from what we call spodumene, which is a complex of aluminium, lithium, and silica in an ore form, as you refine it and get into the part that is used directly in the battery, it gets more valuable. But not necessarily as valuable as some other value chains. And I'm not going to go into that. The key point being that if you refine it over time, you can get about 34% margin as that process goes on. Ghana, we gave a license to a company to prospect. In time, we gave them another license to explore, to do exploration, and now we're giving them a lease to mine, which will be ratified by Parliament. The company has done what we call a definitive feasibility study, which is to say that they've looked at all the dynamics as much as they can, all the aspects of the operation, to get a sense of the true economics of the project. If we go through this project, what is the likely profit, what is the likely revenue, and things like that. And that is available. If you go to London Stock Exchange website, you see all the details. And we at Imani have taken our time to go through it in great detail, and we are still doing that. And the summary is that it's a fairly profitable operation, as some will say, until, of course, the current price crash. It was extremely profitable. And rough margin of profitability is about 23%. That number has to change a little bit because of the fact that the price has crashed. But if you look in that document, you see that they have something they call an MPV post-tax, which is simply to say, after they have been taxed, the profit that they get is about $1.5 billion. And that is more or less what we're dealing with here. One thing to bear in mind is that lithium is not yet one of the more important economic minerals in the world. Even though we talk about the massive growth that we are witnessing, it's still very much in the early days. So if you think of a country like Zimbabwe, which is the largest lithium producer in Africa, Zimbabwe, that's something in the region about $250 million this year. And overall, when it comes to its entire mineral portfolio, it earns roughly $6 billion roughly. Ghana gets $6.6 billion from gold alone. So you're talking about something that the biggest producer in Africa gets about $250 million from, comparing that to gold in Ghana, which is about $6.6 billion. So it's an early stage, and therefore the issue is that all the upside is in the future, which the massive opportunity is ahead of us. The other thing that you also have to note is that when it comes to the raw materials, compared to some other minerals, the raw materials are pretty valuable. And so if you look at the global lithium-ion battery, and you think how much of the raw material component, how much of the value is captured by the raw material component, it's almost 30%. The cathode, which takes the raw materials, is a very expensive part of the battery. So unlike things like aluminium, where the bauxite is not that valuable compared to aluminium, lithium is very different. In the case of lithium and nickel and cobalt and these green minerals, it tends to be the case that the raw materials tend to be fairly valuable. So you have to pay attention even at the early stages of refinement, unlike, say, bauxite, where often until you get to aluminium, you're not getting much value. Last point on the rough background is the fact that I think the big area that, as far as we at Imani is concerned, has not received enough attention, is that lithium is never on its own that important, because most of the batteries are a composite of other minerals. So if you really want to move the refinement to the point where we're going to make a lot of money, you have to consider what is the other minerals you're going to add to the lithium to get the batteries, and where will you get that from? So we call that the strategic complementarities issue. And the simple argument is that if we are really serious, we need to now start looking at which of the chemistries we are going to be focused on, because there are different combinations of lithium that can get you value. And the specific combination you choose is very important, because you have to add other things to the raw lithium to get, let's say, the battery or whatever it is that you're looking for. Now, in our context, we are beginning to think that one particular chemistry, lithium iron phosphate, is probably the most interesting for us, because of the fact that we have unexploited iron ore, and GISDEC is pushing a lot into this iron ore thing, and we have phosphate next door in Togo. And right now, primarily what Togo is doing is in using that phosphate for fertilizer. I will say a little bit more about that when you give me the permission to go on to describe our challenges that we have with the agreement that has been signed by the government.
What is wrong with Ghana's agreement in this regard? From what we have seen, and we have seen the lease agreement, and we have heard the minister, we have heard the CEO for the Minerals Commission, we have heard the CEO also for the Minerals Income, entity, investment entity. We have heard practically all who must be heard. And they show us that world standard, not only Africa standard, this is a far more improved arrangement.
Thompson, so that's where we disagree in the civil society movement. We think there are some significant improvements that can be made to this. And our advice to Parliament is that the agreement be sent back for additional work to be done on it before Parliament ratifies it. And we will be explaining in a few minutes what are major concerns. First of all, as I've mentioned, lithium is yet to become a very important mineral compared to some of the other minerals, but it's expected to become very important. Ghana currently, from the countries that are apparently, are going to be producing or already started producing lithium, Ghana, from the data that we have, appears to be at the bottom rank at this point. But that doesn't change the fact that we are around number 6 or so, or number 5 on the continent. So this is our first foray. We must get it right, given the fact that we are positioned in the pole position to be important. The minister, makes claims that are just simply not true, and with all due respect. He makes claims that this is the best deal ever, and he suggests that the fiscal terms are the most generous. And that is debatable in the sense that if you think about the dynamics that are confronting us, the fiscal terms that have been presented in the agreement that we are all aware of. Yes, the 10% seems high because in recent times we've been signing agreements that some argue have shortchanged us, and the 13% free carry interest is interesting. But the truth of the matter is that if you take the whole historic span of our mining industry in this country, those terms are not that generous, because we can say that in the 70s, Ghana automatically had a 55% participation rate. You couldn't do mining in Ghana unless the state owned 55%. So are we comparing our current fiscal yield on lithium to that era, or we are having an arbitrary period of, say, from 1990 onwards, or what are we doing? So in short, there have been periods in our country when we had way more. Whether or not that was a good thing, it's another debate, because the argument was that by the end of the 1980s, we declined from 33 gold mines to about 4 gold mines, because some argued that the state was too dominant and private investment was not coming in. So private technology, private management capacity, etc., had been shut out. That is a separate argument. But to argue that this is the best in terms of the generosity of the terms is just not true, because we have a history in this country where in the 70s, the Champagne government said 55% of all minerals belong to the state. How is your 13%, or even if you increase it to 19%, or even if you do go further to 29%, as the minister is saying might be the case, how does that compare? We also obviously have had variable royalty structures in the past, as some countries do. Some countries in the region and in the world don't have a fixed royalty arrangement, like we've decided to go for this lithium, in this lithium case. If you remember, as far back as 1987, when we decided to bring the new mining code and to strip away the excessive state dominance in our mining regime, one of the things we did was to pass a royalties law, and that royalties law established variation in the royalty rate. What it means is that how much we get from the outset. So basically, a royalty is something where, regardless of whether the company who is doing the mining makes profit or not, they pay you they pay you an amount, and that royalty. We decided in those days that the smartest thing to do was to look at the operating margin of the company, how much the company is making in profit, and then peg it to that. So when the price of the mineral goes up dramatically on the world market, the operating margin would automatically improve, all things considered, all things being equal, and then we can adjust our royalty rate. So if you look at that adjustment model, there were times when we could get as much as 25% royalty on paper. If you look at WP, for instance, which we signed in '88. And which I think over time Ashanti Gold took over. I think it's now part of their Duprem complex. That deal, from a computational point of view, could get you a 25% royalty because of the variable margin structure. So where did the minister get the idea that 10% is the highest we've ever got? I don't get where that comes from, because we had a period in time when we tied that to the profitability of operation, and based on that, there were periods where, after a particular threshold was hit, we got a certain percentage of every extra margin every extra marginal increase that they got. So that's just simply not true. The truth of the matter, as I've explained, is that even when it comes to what was in legislation, you will see that when the operating ratio hit 70% in the policy that was signed by Mr. Kwame Pepra in 1987, our royalty rate will hit 12%. And that's even forgetting about operating marginal analysis. It's just a basic minimum arrangement. So in those instances, that royalty was higher than the 10%. And this is something that everybody knows. Anybody who pays attention to mind this country knows. So why would somebody advise a minister? Now, I don't expect that the minister will have time to check all of these things. But senior advisors, including the head of the Minerals Commission, who was so aggressive on the civil society movement because he claims I had got some number wrong and was all over us. How on earth did he advise the minister that 10% was the highest we've got when we've had fiscal regimes in this country that allows a minimum threshold of 12%, where the operating ratio is above 70%. And if you use the full variable margin analysis that was in that regime, could take you to a royalty of over 20%. So that is as simple as it gets. It's just not true. The other point is that now we give a lot of discretion to the minister. So the minister is able to negotiate these terms, which is why we are also arguing that Parliament exercise extreme scrutiny. Because what we have now is not like we had in the past, where these matters were deferred to legislation, but specific legislation. So in the contracts that we've signed in the past, before our current approach, when we decided to introduce the new mining code in 1987, that arrangement required that the royalty rate be deferred to the specific legislation, which would have gone to the People's Parliament if it's a democracy. So in those instances, the royalty is not something that the minister just gets up and put in. And now that we have a situation where the minister just decides that it's going to be 10% or 3% or whatever, we think that it makes sense for Parliament not simply to rubber stamp it, but to take another look and say, look, can we go back to a variable margin structure? What is the pros and cons of that? Is it an issue of uncertainty? Would that affect the share price of our partners, which is the private company? What would be the problem if we say, if you make more money, you also want to make more? The other thing that we have to bear in mind is that the minister does some comparative analysis, which is very helpful by trying to compare it to other countries. And I like that part very much because I think comparative analysis is always a very good thing to do. But I think in some instances, there was a lot of selective analysis, which I don't like. I don't like that because I think when it comes to government officials, their attitude, especially the civil servants who are advising the minister, the attitude to be absolutely objective, not an attempt to propagandize on behalf of the government. It's not the role of the CEO of the Minerals Commission to make the government look good. The role of the CEO of the Minerals Commission is to make sure that the public is getting the best information as possible and is doing his job purely in the national interest. So when you say, for instance, that we are doing better than this, we are doing better than this country, but you don't add the other countries and some of the other things they do, which we are not doing, then you're not giving an objective analysis. So to give you an example, we all know that Zimbabwe and Namibia have introduced policies to ban the export of spodumene concentrate, or what most people call raw lithium. And they are requiring that you do downstream processing to improve the value. We have not yet done that. And I'll show that in the agreement, we've not really imposed that condition. Some will say that is more nationalistic. In Mali, for instance, they've adjusted their policy that allows them to get 20% additional participation on top of the 10% free participation. So they get 10% for free in the equity of the company in their country, and then they get an additional 20%. In our case, we are hoping in further negotiations, because that's not what is in agreement, that we'll get 20%. What is in agreement that is assured is the 10%, the 13%. So in that sense, the Malian regime is more beneficial. But we don't really talk about that. We don't talk about the fact that in Zimbabwe, they have a state lithium company, and they had arrangements to have state participation in actual mining. So they have a joint venture between Zimbabwe Lithium and Zimbabwe Mining Development Corporation, even before they had the expansion that they've seen in their reserves. So my concern there is not that compared to others, we are not doing well. My concern there is that there are others who have done things where the country has benefited more if we are using purely nationalistic terms, like how much in total you get. But we have to be careful about that whole analysis because, what the country gets and what the investor gets is a dance. You have to do well by the investor, you have to do well by yourself. And it's very difficult to use these very blanket comparisons to attempt to prove that, Ghana has done better than all the other countries, because all the countries have done different things. Namibia, for instance, a lot of people talk about the fact that they don't have free carried interest. The government doesn't automatically get get a share in the entity that is doing the mining locally. But Namibia also has a higher tax rate than we do. Namibia also has a stronger joint venture, a tendency to promote joint ventures with Namibian companies. And the lithium that's being mined in Namibia is a joint venture between a local company and a Chinese company. So there are these complexities that I think was not well served when you look at the way that the comparisons were made. Anyway, one of the more concrete, and here I'm going to now talk about, rather than my analysis of what the minister said, the specific things that we think should be improved. In the agreement, we tie our royalties to the sale of the minerals. Now, the challenge there is that the sale of the minerals then automatically means that the sale arrangements that the company makes dictate the pricing. And we think that there is room to look at whether we can start to explore a benchmark pricing index. Essentially, if you think of if it was gold, where it's a very developed market, so there's a lot of the volatility is not as crazy. There's the London Metal Exchange and other benchmark which gives you pricing for sports and future. And it's easier in the gold agreement, for instance, to say that when you sell your gold, we don't care how much you sold it for. Our royalty we peg to the pricing benchmark for LME. And why is that important? It's important because it stops you then from having agreements with people to do offtake that may be lower than we could get in the open market. Because right now, for instance, in our situation, 50% of the lithium, the spodumene concentrate, 50% of it is automatically assigned to a company called Piedmont or Piedmont. And this company will get 50% at a fixed price or a pre-negotiated price, independent of our deal with the company. Now, if, for instance, because of the fact that this company is also participating in the entity and has been the one that has funded the early exploration and all of that, it's not an arm's length pricing arrangement, then the challenge that you get is that you as the royalty taker, you're not benefiting from the best pricing. You see what I mean? So it might make sense to try and find some kind of benchmark pricing. It's not going to be very easy for lithium because of the way the prices are moving. But if we are smart, we might be able to develop a benchmark pricing index which goes into the agreement so that if they do offtake agreements with other people, that may be lower the prices. It doesn't affect our royalty because our royalty is benchmark fixed. This some experts may look at this in great detail and say we don't agree, but I think that we have to take into account the fact that because of the nature of the market, it's not a very high volume market. There are a lot of potentially non-arm's length pricing arrangements in the offtake mechanisms that may not benefit us because they may benefit on the other side. Let's say Piedmont decide to invest in another project of theirs on very good terms, and therefore they give Piedmont very good pricing, and then that affects our royalty take. Given the uncertainties, our strongest argument is that the government needs to approach this from a real options point of view. What that simply means is that instead of this very simple agreement that they've done, in some cases there's a benefit to simplicity. But in this case, we don't think so. We think there has to be more options in the agreement in some of the respects. We've talked already about royalty. When the operating margin changes, we think the royalty should be variable. We think even in the case of equity, the way that they should exercise the equity is not the way they've done it now, which is they've done it in a two-pronged manner. For the government, it's a fixed kind of thing, and we say in the future we may negotiate for more. For MIF, which is the Sovereign Wealth Fund, they've allowed them to use warrants, which is a kind of option. So what it means is that they have the right but not the obligation to buy more if the price improves. But there are other options that we can use, and why not use it for the state too? Because MIF, given the fact that they can easily exit their position, given the fact that they are sovereign wealth fund, as opposed to the state, where we are a lot more, the regimen is much more stricter. We are not too happy that the state is not using options, not using some of the warrants. So not just warrants to exercise when the strike price is at a certain level. We want warrants that do other things as well. And we think that the agreement is too simplistic, given the uncertainties in lithium. If you're doing gold, we wouldn't have a problem. But lithium, a lot of crazy things are going on. For one thing, there is a lot of aggressive push. There's a massive and aggressive push to look for alternatives to lithium-based batteries. Laboratories all over the world, some of them funded to the tune of billions of dollars, are experimenting with all manner of battery technologies. In a time may come when lithium-ion batteries are not the big deal in electric vehicles possible. We don't know that. There's a recycling boom where after you use the electric battery, remember that the batteries for NMC, for instance, just 4 years. After 4 years, the charging ratio drops to as low as 20%, and people just simply change it. So when you throw away the battery, nowadays people are recycling the lithium, and that boom is really increasing. A time may come when we are getting more lithium from the discarded batteries that we are mining afresh. And we don't know yet. All of those things, plus, of course, the thing that everybody's talking about, the massive crash in prices. Prices have dropped from a high of about $81,000 a ton for lithium carbonate and hydroxide to something like $16,500 this month. So that's a massive drop in value. So we don't really know what is happening with this lithium thing. That therefore required that we're very careful in the way we structure the agreement to take into account the uncertainty. The other point is also in respect to the same uncertainty is that we are not, this is not gold where the company that we are dealing with is some big established global company with a long track record. This is a very junior miner. In fact, so junior that when they were doing their prospectus in August 2022, they actually boldly said that they had all their mining licenses and they have everything and they are ready to do production. In 2022, when they didn't have a mining license, they didn't have a mining lease, to talk less of one ratified by Parliament. But they were already saying their prospectus and they were raising just $13.2 million. A company that has to tell such obvious untruths, because everybody could have checked in their prospectus in order to raise $13.2 million. It's not a very strong company. Its total market cap, even at that time when it did the raise, was about $342 million. Newmont is about almost a $50 billion company. So this is a very small company. Small companies in early stages of their formation, recently their biggest shareholder tried to acquire the whole company. They didn't agree. That's assured. It's a lot of things can happen. And for all those reasons, and the fact that it's also a very complex structure in the way that is set up in Ghana, it has, these multiple subsidiaries and multiple contracts. Remember that part of the same company or its subsidiary has been operating as a botine for a long time in Ghana, hustling in the gold trade. It's not a very strong company is what I'm trying to say. So you have to be careful in the way you structure your agreement to take that into account. And now we take on MEF, and I'm happy that the CEO is here and can answer to this. But there are a lot of self-congratulatory claims that they make, which are a bit problematic for us. For instance, they make the argument that they've already started to make significant capital gains appreciation on the investment they've promised to make. And it's not clear yet whether they've already signed the documents and therefore they own the 6% contributing interest in Awaya and the 3% in the holding company. But they are not saying that, because at some point in time, the price moved from 26 cents to 34 cents, they've already made money. But that's not how you do this analysis. These are you have to take into account the price over a longer period of time to see whether or not these are trends that you can bank on. Because already that share price has dropped to 27 cents. So the 26 to 34 is no longer even valid. Already the price has dropped. And as the price of the raw material keeps dropping, the share price of Atlantic Lithium will also keep dropping at some point. So it's not clear why they do that. Already this is a company that has lost almost half of its market value since it was established. It's moved from about $342 million to about $168 million. So if you are investing in it, you don't become so self-congratulatory. I'm not saying that there's a problem with the investment. I'm just saying that it's too early to be prematurely celebrating. It could well be that it's a great coup because of what we are all aware of about the transition. And so lithium is going to be big. If lithium is big, Atlantic Lithium will be big. But my argument is that we have not seen that yet. To already say you already see massive appreciation, I think means just propagandist. And for a sovereign wealth fund, you should be extremely conservative. And we have the same with anti-dilution. You don't say anything about the anti-dilution. But the dilution issues in a very early stage company could be said that your 3% could be wiped off if they raise more money, unless you have anti-dilution. And you don't say anything about that. So we have very great difficulty understanding the value of the investments you've made. And we think it's too early stage anyway. Secondly, there's the valuation that has been made about the project. Remember that there is a holding company and it owns a certain share in what's going to be produced. Half of it has already been pre-sold. So for the value of the project, there is a certain valuation that you try and give to the project itself as opposed to the company. And we've seen three different numbers by MEF. In the statement they released a couple of weeks ago, they said the Awaya project is $1.4 billion. In their recent one, they said $691 million. That's the one that they've just circulated to everybody in Ghana. And then we look at Piedmont's investments, because Piedmont is the company that has been funding this project, and they put in early money in order for them to get 50% of the spodumene concentrate when they want to exercise that right. And we look at how much they've invested at and how much they've gained. And that gives you an implied valuation of about $360 million. So we have three numbers, all of them. The last one seems the most plausible. The $360 million seems the most plausible. The ones that may have given us the $691 million, the $1.1 billion, need a further explanation. I think if Parliament scrutinizes this very carefully, those discussions will be made. The other issue we have is also that they have all of these provisions which they've praised a lot, value addition and things like that. But actually, there are no timelines to them. So it's not clear whether, when after 12 months of getting the license, you are required to serve the Community Development Agency. After this period of time, you're supposed to do this or that. Most of it has been left in very vague language in the agreement. The provisions for refinement, which is the biggest thing that they've banked on, that we are doing refining, we hope to do refining in Ghana, it's actually extremely loose. So it says essentially that they would do a study, and the study would determine if they can do more refinements beyond the spodumene concentration to lithium carbonate or lithium hydroxide. And then if the study doesn't say that, then they don't do it. But then they have to be willing to give the concentrate to some other investor who then comes in and does the chemical plant. That is not the same thing as saying that they will definitely do refinement in Ghana. On top of that, it's not clear what refinement you are talking about. Is it that, so if the company, for instance, moved from 5.5% spodumene concentration to 6% spodumene concentration, because remember that in what they are going to be processing now, half of it is 5.5%, the other half is 6%. If they decide to shift the other half from 5.5% to 6%, would that qualify as refinement under this provision? No lawyer who reads this can tell you that for sure it doesn't. Or what if they decide to do intermediaries? So move from, let's say, lithium oxide, the raw lithium oxide to some sulfate or chloride before they do carbonate and hydroxide. Would that qualify? We think that whole thing should be drafted with a proper schedule, which gives you some specification for what will be considered refinement in this area. Last set of points. We also think that the geopolitics in this is very interesting. There's a huge competition between China and the US. The way this has been framed internationally is that this is the first time the US has won over China. And so Ghana has this, leverage that we can apply. And I think we should do better with that. And that comes to the issue of our strategic complements. Lithium alone doesn't really get you into the battery space, which is where we have to get you if we want to really transform our economy with lithium. The battery space requires other minerals, and if you look at the world, there's this very fascinating game theory going on about how the different minerals combine with each other to create strategic opportunity. We think that our opportunity here is potentially in lithium iron phosphate, and because we have iron here, we have lithium here. Lithium iron phosphate batteries use less lithium, and also now, based on the latest studies, they are outperforming NMC, the nickel cobalt based batteries. And lastly, we have Togo just next door, and we have AFTA. We can do some kind of integrated mechanism, ensure that we're producing lithium iron phosphate batteries together with Togo, and that would be very exciting, and we look forward to seeing that. Last point before I end, is that the green minerals policy was poorly done because consultations was very, very, very bad. And nobody in civil society, in the segment of civil society that I'm aware of, that's highly involved in these kind of matters, was invited. We don't really understand whether they paid particular attention to the things that we have been saying over the last couple of years in Imani, in ASEP, etc. And we think that because of that also, we don't have a green minerals law. And if we had a green minerals law, some of the delegation of action that moves from the agreement that we've signed to general law would have gone to a specific law. So a lot of the time you read the agreement, they say, oh, for this you must apply Ghana's law. For this, you must apply Ghana's law. But that law is very general. And we accept that for green minerals, it's a different ball game. So if we accept that for green minerals, a different ball game, then why don't we have a specific green mining law? And then when you do these referrals from the agreement to say, oh, for these environmental obligations, refer to the law, or for this, then refer to the law, then it will be referring to a specific green mining law and not the general law that we have, which we already accept is not very suitable for the transition mineral space, which lithium is part of. So that's our comments, and we look forward to a robust debate going forward. And more importantly, for Parliament, requiring that the agreement be worked on further before it ratifies it. Thank you.
Thank you very much, Bright Simmons. And Bright Simmons will stay with us because we will go into the segment after his presentations to now begin to ask the questions. But clearly, he has a lot that he said. For example, he's saying that there was no civil society involvement in the green minerals, policy making. I don't know if that is different from the renewable energy discussion, because I understand that civil society, including the one that you represent, participated in that. We'll ask all those questions. The claim of historic 10% mineral royalties. He says that is a pure lie. Damning discoveries and claims, discrediting the celebratory claims by government in this lithium agreement. We'll come back right now for the questions. Look at the way the law.
Ratification by Parliament is a condition precedent, and as the Supreme Court explained in the Eston Cubic case, an unratified mining lease confers no enforceable rights, and government has always been mindful of this decision. The mining lease in question will be laid before Parliament for ratification. That is non-negotiable. But before such agreements can be laid before Parliament, it must go through a number of processes, including securing Cabinet's approval. The processes are ongoing, and once completed, the agreement will be laid before Parliament for consideration and hopefully ratification. One other point she makes, that anybody who supports this transaction must have benefited from the transaction duly. So here I am. I support the transaction. I must have benefited from it unduly. No evidence. Her Lordship, Her Ladyship, Chief Justice Ofaya Kufu supports this transaction and more or less casts insinuation and compromise all of us our integrity. When we all know that the rule of the game is evidence, and that she put something on the table, that Minister Jinapor has some hidden company in offshore where he holds some secret 5% in this company, and that is why he's supporting the deal, then we are having a proper conversation. But you make this statement that everybody, anybody who supports this transaction must be benefiting from the transaction unduly. Sam Jonah, one of the foremost leading mining administrators in our country. If I'm not exaggerating, I'm not too sure that there is anybody, they see inclusive, who can match up to Sam Jonah's pedigree, at least when it comes to the mining sector of our country. Sam Jonah has come out publicly to say this is one of the best transactions Ghana has ever negotiated for in the mining industry. He's on record. It was published on the Daily Graphic. I read it. Per the logic, very respectfully, per the logic of stateswoman, former Chief Justice, Sam Jonah is supposed to be benefiting unduly from this transaction. So I may get a little difficult to confront some of these things. Say that, look, I'm reluctant to get into a bantam with her or to make comments which can potentially sound disrespectful. But really, our doors are open. If there's anything she has which is superior to what we have done, we are very happy to listen to her. But her comments are, to say the least, most unfortunate.
You're welcome back. This is Newsfile. It's your most authoritative news analysis platform. And here on Newsfile, we put Ghana first. My guests helping us to understand the lithium mining agreement between Ghana and the Barai DV Limited, the Atlantic Lithium Investment Company. Martin Kwekwesi is Chief Executive Officer at the Minerals Commission. He's biding his time, making his notes, having heard from Bright Simmons, those damning exposés about pure lies that have been used in celebrating the 10% mineral royalties, taking us back to the 70s when the state had as much as 55% stake. Subsequently 12% up to 20% thereabouts, and questioning who gave the minister such bad and wrong advice. Of course, the comparisons that have been made with other countries like Zimbabwe, Bright digs in directly. He's making his notes to speak to those matters as well. Edward Coranting is Chief Executive Officer, Minerals Income Investment Fund, MIF. Bright and his group also, asked them to relax in their celebration. And he says, they are saying already that they are making gains, and they have repeated that even though this has not started, they have already made gains. How exactly does he respond to Bright's comments in that regard? Dr. Kwabena Donkor is MP Pro East and former Minister for Power. Ranford Jampo, professor at the University of Ghana, is an indigene of Infantsman, where the Lithium is located, and president of the Salpon Forum and Infantsman Youth Association. The people there, partly led by Professor Jampo, have also raised issues, including certain demands that if they are not met, there will not be lithium mining in their backyard. Now to you, Dr. Kwabena Donkor, what's reading it, you know, without the benefit of expertise, reading the agreement and comparing that to the history until Bright came in and sort of spoiled what I had prepared. It looked really good. Again, there's been claims that, oh, we should tender. How do you do that for a company that came in 2012, started, you know, the exploration, prospecting, then subsequently has invested in excess of, is it 50 million US dollars, as we are told, to come to this point? And you have to give them a contract to do the work. You say, let's go and tender. How do you do that? I have read research work that says that in terms of mineral exploration such as this, you don't say tender. What happens to the person or the entity that has already spent so much, a fortune, in discovering it?
Thank you. I want to start by saying that I'm a believer in resource nationalism. And I believe that is, for me, the starting point. The resource belongs to the people, and so the people must benefit from the resource. That is the starting point. However, resource nationalism must be based on knowledge, must be based on fact, must be based on commercial reality. So we have people outside the sector rightfully wanting and demanding more for the Ghanaian state. I don't have any problem with that. However, there is a very good article by Ken Hado in the Journal of Energy and Natural Resource Law on tendering. Whether
I've read that.
yes. So the question is, to do a good tender, fortunately, natural resource, particularly mining and petroleum, oil and gas, are both extractive. To have a tender, you must have adequate, credible information. If we decide to resource, for example, the Geological Survey Authority to do the initial prospecting, do the initial survey, do the initial prospecting, and we now have certain data that we have this mineral resource, we have this mineral, then we can call for a tender, because like we do in petroleum, because then it is known, you've shot your seismic, you have all your data, so then you are tendering to get the best terms. But not when out of every 10,000 prospective prospects, you are only going to get 1,000 prospects, actual prospects. And then when you actually do the work, you will be lucky if you get another 10% coming to culminating in a mine. So there is such huge unknown risk. And I'm 65 years old. I've lived through regimes. We had the State Gold Mining Corporation in the gold sector. Why did it collapse? First of all, the Ghanaian state couldn't put in the needed resources, the investment needed. We couldn't. Then there were issues with technical and commercial management of this. In those days, we had majority control and we couldn't manage it. Has something really changed? I'm also the ranking member on state-owned enterprises, and the history is generally abysmal.
So first, you concede that the question of tendering doesn't come in at the start.
At this stage, no. Unless we do further work.
Our law actually makes provision where we are the ones who have made sort of the investment into gathering the information about the discovery, then we can tender.
Yes.
But in this case, like you read about the researchers, you agree with their conclusion where they say, I read just a portion of the conclusion, where they say, for hard rock minerals, material value occurs too late in the prospecting, exploration, evaluation cycle for it to be, in most cases, available to the state to tender. In the early stages of hard rock exploration, unlike with oil and gas, the odds of economic success are very low, and therefore mineral rights for such activities have too low a value to be worth tendering. Alternatively, the costs and risks required to generate value worth tendering are too great for it to be prudent for the state to incur. Having borne the costs and risks of value creation, as it should, the private sector should have the secure right to an adequate return on its investment.
No, I agree with the conclusions. However, this does not mean the Ghanaian state should not maximize what it can get from the arrangement. My major thesis is that if Ghanaians want to get more from these relationships, we should be prepared to invest more. And one of the things I would be raising when this agreement comes before Parliament for ratification is that MEF should increase its equity shareholding. So we are going to put as that MEF should put money where its mouth is. I think MEF should be able to do more than the 6%.
You just made a concession, which means that there is fairness in allowing the prospector and explorer to have the exclusive right to mine.
No, the right to mine is not necessarily exclusive. For the investment you've put in, yes, you have the right to mine. All I'm saying is that MEF is not carried. MEF is putting in equity. That is the difference. MEF is putting in equity. So my personal position, and I've espoused this, in fact, even I told the minister, that we should get MEF to increase its equity in it. When we increase our equity, then we get a lot more from the venture. But that is even not the only issue. Have we capacitated our regulatory bodies to ensure that the Ghanaian state is not cheated? For example, transfer pricing. Between the Minerals Commission and GRA, we need more capacity to be sure, especially when the Atlantic Lithium has the right to sign offtakes with others. What is the price that the commodity or the product is being priced in the offtake? The Minerals Commission and or the GRA should be in a position to look at, yes, you have the right to sign, but you sign this offtake, at what price? What is the prevailing world market price? And because world market price is not static, how do we benchmark that? If it's a 5-year offtake, that at any one point, the Ghanaian state gets the best price. So these are the technical issues that we will have to deal with as a people to ensure that we get our value. First of all, we must put in more equity. Secondly, we must learn from our history. If we went for example, in the gold sector, the royalties are less than 10% in the gold sector. That is. In this particular one, royalty is gone to 10%. Are we really, is it our intention to make money as a state from royalty? Or to make money from full participation? I think royalty is just one item. And if we take in royalty at the mine head, then we can also reserve the right to take the product and sell our portion of the product, or allow the company to sell the product at well price with our regulatory bodies, making sure that the product is not undersold, and then we take our 10%. And normally our 10% is gross. It's not net.
You just said that you will be urging MIF to increase its equity.
Precisely.
MIF has informed us.
Beyond the 6%, let me.
Yes.
Beyond the 6%.
MIF has informed us that it is going to subscribe for about 20 million Atlantic Lithium shares for a value of $5 million, equaling 3.06% of the total issued share capital of the company. They also say MIF has the right and warrants to buy more shares at locked-in price, and this could increase MIF shares in Atlantic to 4.5% if warrants are exercised. What's your specific, what specifically are you looking at when you say they should increase their equity?
The 3.3% you mentioned is in the parent company. It's not in the Ghanaian operation. I'm talking about the Ghanaian operation. We have very little control over the operations of the parent company because that is outside Ghana. But I am talking about the 6% in the Ghanaian entity that we would need. My personal position is that MIF should increase its equity in the Ghanaian operation. And because that is within the control and the purview of the Minerals Commission and GRA, we can work on transfer pricing, ensure that there's no transfer pricing, ensure that profit is actually declared. And between GRA and Minerals Commission, we should put in the capacity, that is if they don't have the capacity. Those are the areas that we gain as a people. Then, yes, I like the Community Development Fund, but that is not the real game changer. The real game changer for me, and I agree with Bright Simmons on one area, that let's tighten the contractual obligations for the setting up of the chemical processing plant in Ghana. Let's tighten it. There is that commitment. The agreement I have seen, and by the way, let me state this here. A former Attorney General advised that agreements in natural resource space, which will need parliamentary ratification, should initially should not be signed, but they should be initialed. Until Parliament ratifies, then there is a formal signature. That was the advice given to us when.
But the law says it's an agreement you bring there. It doesn't say it's an incomplete agreement you bring to Parliament.
Well, you see, I am not a lawyer, but the difficulty then is that if Parliament rejects it? Can they sue? Can they take us to arbitration? If Parliament rejects it?
There is a precondition
It's a condition
stated right in the agreement itself.
Yes.
At the very beginning in clause 1.
Yes.
That this agreement is subject to ratification by Parliament. And there's a reference not only to our constitution, but also to our statutes,
and that
which require mandatorily that there will be a ratification.
Yes, and that is the reason.
Which means the person who has signed the agreement agrees to the potential that they will have to renegotiate the terms.
Yes, which is the very reason why the former Attorney General advised that rather than sign fully, we can initial, both parties can initial.
I'm trying to understand, what is that? A half agreement? The agreement ought to be executed before you take it to Parliament.
Well, this was the advice when I was minister.
Okay.
Because we got into some problems. Indeed, I see the sense in that position, because if you remember the excess capacity, the NDC government signed too many power purchase agreements. When we asked that, look, I brought only 5 agreements to Parliament. Only 5 of such agreements have parliamentary approval. And yet, the minister, again with a legal opinion from the Attorney General, that some power purchase agreements signed by ECG were also binding, and they counted all of them as agreements we have signed. And then I said no, because all those agreements contain a government consent and guarantee. So it is in the context of that. Because then you have a situation where even the Attorney General says that those agreements have been signed, and therefore we have to negotiate an exit over those agreements. And that is the controversy when you have the situation where the NPP government says NDC signed too many power purchase agreements, and then said no, only 5 of them were approved by Parliament, and so they are only those 5.
So listening to you,
So
essentially, you don't seem to have specific issues with this agreement.
I do, but not in the
except you want the equity of MIF to increase.
No, that is one. I want the agreement to be tightened.
How?
I just gave you an example.
Which part of it?
For example, the processing. Because the current agreement says they should present a plan. And they should do a feasibility. And if the feasibility turns out that, okay, it is not feasible to set up the plant in Ghana, so we won't do it, then the Minerals Commission, the government of Ghana, will have to find a partner, somebody, to do it. So those areas can be tightened. The general...
Tightened to say what?
To insist that they must be a processing plant in Ghana. For me, that is critical. But
it is the feasibility that determines having that.
So we either do the feasibility first.
Which we understand has been delivered.
Yes. We either then do the feasibility first before we sign the contract. Then we are extremely specific. So that area can be. But I also have an issue.
But the language of the contract makes provision that once feasibility supports, then it ought to. But if the feasibility proves negative, it's consequential. You don't have to.
You see.
So what is there to tighten?
There is a lot to tighten. We must not export the raw material.
Which is a giving, which is already set out in this contract.
No. From your very argument, if you say, what if the feasibility is negative? What do you do with it? From your argument, turn it the other way around. Okay. And that is why one of the reasons why
thankfully, Mr. Isi is here. We also have Edward also on the line with us. So let's get some direct answers from them right now.
I'm not.
Okay, go ahead.
Because my colleague has so much more. But the most important thing is to look at mining, and in particularly the green minerals, holistically. I would prefer that we have a law, whether it comes under an LI specific to green minerals, or we amend the existing mining and minerals law to make provision for green minerals so that we are extremely clear. But we should also understand that we are on we are on an unknown trip. I believe a lot of research is going on to find alternatives to lithium for batteries. If you read the literature, there's a lot of research. What if tomorrow there is a new product? What do we do with our mine? Okay. And that is where the byproducts, very little emphasis is being placed on the byproducts in the public space. The kaolin is critical, the silica is critical. The three major byproducts, their impact on our industrialization.
MITH has a right to 40% of the lithium spodumene. I don't know.
No, is it 40 or 50%?
40% of that. And it's seeking to use that to leverage.
Well, the document, I don't know if it's revised. The document I have seen is 50.
Then
yes.
Atlantic and MITH are to develop the feldspar value chain.
That will go into our ceramics.
Great.
And our tile industry. And for me, that is a major.
And that is good?
No, it's good. It's good. That is major. Does that not answer your concern? It addresses a part of it, but the linkage and the discussion in the public space, the impact of this, if properly managed, on industrialization and manufacturing, that has had very little space. So far, it is just the mining, the lithium batteries, but the downstream effect, if we manage it well, it's going to help this country out.
Okay, thank you very much. And I think the instructive part is about managing it well. Because, look, as I started in my introduction, we have done gold, we have done cocoa, we have done oil, and yet we are IMF. We are so poor, and we have our population, so much of our population in poverty. When these things happen, we begin with all the celebration. So obviously, it has to do with the management, the leadership to manage it. It's not about not having the resource.
And also the quantum, just say, the quantum. For example, we over-celebrated oil when we got oil. We are producing only about 200,000 barrels. So the quantum, and this is also relatively a small discovery at this stage. But it is important we get the policy right.
Mr. AC, let's have your responses, and I can see you noted them down in a certain way. So I'm not going to stampede you into any. Beginning with Bright, the red flags that he raised. Some of them facts. You can't deal otherwise with them.
Something, thank you. Some of them were also pure lies. So let me correct him. 1, Zimbabwe did not ban concentrate. He said Zimbabwe banned concentrate. Zimbabwe passed a law, base minerals exports into bracket unbeneficiated lithium ores, order 2022. In December, they banned the export of raw lithium and imposed a 5% tax on the export of concentrate. They have just read their 2024 budget and they said companies should submit plans how to beneficiate it. So that is wrong. Zimbabwe did not ban the export of concentrate. As I sit here, concentrate has been exported. In fact, they are even doing galamsey with their lithium. So let me correct him. The December law did not ban concentrate. So you should go back and look at his research. They've given all the companies 31st March this year, next year, 2024, to bring the very plans we are also requesting for by 2024 February. That's number 1. 2, he also said the minister lied by saying that there was this 12% royalty thing. Let me correct him. I know of that law. And in any case, I'm the one who told the minister. We've had this 3% royalty regulation, 3 to 12 in 1987. It's been there. And the records are there. Something, nobody has ever paid royalty more than 3% in the history of Ghana. Nobody. Until 2012, when Dr. Kwabena Dufo passed this 5% royalty. Nobody. So we said, let us impose a rate that will be paid. So he was confusing what the minister said. This is a negotiated rate, 10%, which will be paid, as against the 3 to 12 that he said was the highest, but nobody paid 3. Because if you go to Chile, they have the margins. They have 8 to 26. That's the highest you can see in the world. So if he said that it is on record that we have had 12% royalty, what the minister said was clear. Never, and you see he referred to Anglewood 5%, Newmont 5%, etc. So this is the 10% that a company is going to be paid. It's different from the 3 to 12% range that we used to have. Under that royalty law, no company, actually people did not even meet the margins, because you need to reach a certain profitability ratio, then beyond 3 will kick in. It didn't work. So all these were considered when we were doing the discussion whether we should go for the Chilean model, 8 to 12. We said no, nobody paid more than 3%. So I need to clarify that and put that in context. Nobody has ever paid 12% royalty in our history. Actually, nobody has even paid more than 5% in our history. So it's important I correct that misrepresentation. So
he was suggesting to you what in essence constitutes royalty. If you have this to that, this bit to that, if you put all that together, you will get past what you are talking about now.
Let me tell you.
At a point, he shows us how the state had in excess of 50% stake. So what is historic about what you have done?
No, again, let me correct you. The 50% he talked about in Ashanti was nationalization. Achampon nationalized AGC, and then there was a split, 55 to 45.
Equity.
And that is when, during the economic recovery program under Rollins and Co., we sold all those our shares. So Ashanti was nationalized.
Yeah, so but it remains a fact.
That's a different something. Let us correct this. I'm correcting 3 things. So allow me to correct them.
That one he didn't say royalty.
Hang on.
He didn't say royalty. He said stake.
You hang on. He's made 3 statements that is out there. People are listening to us. I need to correct that.
That's fine. That's why.
Number 1, I'm saying Zimbabwe didn't ban concentrate. He got it all wrong. The law came in December. They banned export of raw lithium. They have just read their budget and they said they are giving everybody up to 31st March next year to submit plans for beneficiation. What we have in our law, I'll read it and we'll delve into it, because he said it is loose, so I'll address that. 2, he said we've ever had 55% stake. Achampon NRC Decree 132, 1972, nationalized AGC. Okay, you can call it partial nationalization because Lonro got 45 and government got 55. That was nationalization. So it's not as if you went and negotiated for a 55% stake. So that also needs to be corrected. And then the last one, royalty, which he said minister was lying. Minister was very categorical. Nobody has ever paid royalty more than 5%. Yes, there was a law. I knew of that law. I was at the Minerals Commission when that law was in existence, which was repealed. So that was a range 3 to 12. We examined all that. Nobody paid more than 3% under that law. So what minister said was very categorical. They are going to pay 10% royalty simpliciter. So it's important I correct that. So he got it all wrong. Zimbabwe never banned concentrate. So that is it. Then there's also another issue I also need to address. Samson. He said something which I was happy about. That I need to praise him. Samson, the real deal is in the value chain. The real deal. Okay, so when I hear people saying now we should take 50% stake, I ask myself, Atlantic Lithium or Barari lease could be 100% owned by government of Ghana. We could own the property 100%. What happens if we cannot refine the raw lithium? You have to export the concentrate raw. You have to take the concentrate out or even take the raw lithium out. So the ownership thing is not what we should be thinking of so much. Again, remember that the goal of government is to add value. That's where the money is. So if you put all your fiscal elements and taxes in the mining operations, what you end up is that you find a situation where the raw material that a company needs to put in its refining, let's say it is costing you 5 cedis to produce it. You go to Chile where they produce it cheaply than even the hard rock in Australia, maybe it will be 2 cedis. You go to Zimbabwe, maybe 1 cedi. And then they will come and tell you that it is not economic to refine a concentrate in Ghana, so give us subsidies. So it's important we clarify that we cannot put all our monies there. I'll leave some aspect of the MIF saga to Quentin to address, but something, must the state take everything? So here I'll disagree with, or I'll differ from the Honorable Member of Parliament for Pruis. He says MIF should increase the government stake. My response is that, why don't you allow Ghanaians to buy? So these were some of the issues that came up in cabinet. That instead of MIF buying 20%, 15% or 30%, we said no. Why don't you go to the stock market, make it mandatory for you and I to also buy? Must the state get everything? So the emphasis is on Ghanaian. So
going to the stock market is mandatory?
Yes, it's mandatory. They have to list. Right. So that has never happened before. It's mandatory. They have to.
Ghanaians have the opportunity of buy. What percentage? 30?
No, I think it's... The minimum, the policy directive we got from government through cabinet was that at least ensure that state and Ghanaian participation is not less than 30%.
Together.
Yes, so we could even, if you go to the stock, they'll even get more. And let me tell you an issue the president asked. He says don't make it free for all. Because if you take it to the stock exchange and people from Europe, Asia and co can come and buy, then it's as good as not listing it. So we are targeting pension funds, hedge funds, and also high-end Ghanaians. Perhaps a very rich person who has made so much money from law practice, like you. Let us go back to, I don't know whether you want to read.
I say amen to that.
Yes, let us go back to the provision. Look at page 23.
Right.
And read the provision on value addition or the downstream.
So you're still here with us.
He says it is quite loose.
And presently engaging the CEO of the Minerals Commission. You said page 20. Page 23.
Page 23. Look at Schedule 2.
Page 23.
If you can read to our hearing.
Is it investment by the Minerals Income Investment Fund? Is that what you're referring to?
No, there's an aspect on downstream.
Page 23. Page 20. Schedule 2. I'm looking at it.
That's page 23.
Yes.
Read.
So, no, it's a long schedule. Feasibility studies here.
Then no, read the one on feasibility.
Okay. Upon the grant of the mining lease.
Just a minute. He said it's a bit loose, so I need to explain.
Upon the grant of the mining lease, the company shall undertake a definitive feasibility study on the feldspar produced as a byproduct of the mineral and will submit a report of its findings to the Commission within 4 months after the date of the grant of the mining lease.
Read the next two.
Upon the grant of the mining lease, the company shall commence a scoping study to evaluate the economic benefits of the downstream conversion of the concentrate in Ghana and will submit a report of its findings to the Commission within 4 months from the date of the grant of the mining lease. Subject to the outcome of the scoping study, the company shall establish a chemical plant for refining the concentrate in Ghana. Where the company is unable to establish a chemical plant, the company shall make concentrate available to any chemical plants established in Ghana for refining on terms to be agreed. All byproducts of the mineral, such as feldspar and kaolin, shall be sold locally, and such products shall not be exported unless expressly authorized by the minister where there is no demand for the product in Ghana.
So Samson, give me 5 minutes and let me throw light on this because it's very important. Because
it's self-explanatory.
Yes, he said it's loose. So I need to explain. I'm happy you understood it. Samson, let's step back a little bit and look at the experiences of our gas development. One of the issues, people like him who do a lot of research and civil society and everybody was raising at that time was that we need to have plans for our gas before we start producing oil. He's here, he can correct me. Are we going to flare like Nigeria? And then, as usual, we sat by, then we started producing gas and we started flaring. Now, a lot of gas is being used anyway. Remember, it is going to take no less than 14 months for the mine to be constructed. You understand that? We have not finished other regulatory processes yet. Ratification, which people are confusing with prior approval, because ratification means the process is complete. Prior approval, you have to take it to Parliament to be approved before you come and sign. So let us not confuse that. We will do that. Then we'll go to EPA, we'll go to the environmental permitting process, then they will do the operating permit. So we've given ourselves maybe up to somewhere first quarter of next year. All this while they cannot start in operation. They even have to come back to Minerals Commission for a construction permit and all those stuff.
That'll be sometime in 2025.
Yes, but then we don't want to repeat the mistakes we made in oil and gas. So two things are happening. So I have here, this is a scoping report. We'll be getting a feasibility next week.
Feasibility study for feldspar and
kaolin
industrial minerals.
Yes.
Potential of processing feldspar in Ghana. Okay.
So,
UMAT Consultancy and Support Services Limited.
Yes. So
Professor Richard K. Amankwa.
So a committee has been set up by the minister. I'm part of this committee. We insisted that we don't want you to give the feasibility study to somebody from Canada or Australia who come and lie to us. So we insist to give it to somebody locally. So they gave it to UMAT. It's being led by Professor Amankwa, who is a vice chancellor and metallurgist. This is a scoping report, has been submitted. Next, we will get the feasibility. So, but in the agreement, we gave them up to February. So it means that within this December window, we will know what to do with our first part. Let me touch a little bit on it. Something, we have 5 companies doing ceramics in Ghana. 5. We have Keda Ceramics, we have Wankan, Centio, Marco Polo, and Jintao. When we check the data, they use about 960,000 tons of feldspar at a grade of 8%. Now they get it from artisanal miners. Small scale miners, we have license.
At a grade of 8%.
At a grade of 8%. Small scale miners around Shama, Central Region, and Co. Now, in the feasibility submitted to us by Atlantic Lithium, the feldspar content identified is 15 million tons. If you divide it by 12 years and then by 1 year, you get 1,250,000. So that's roughly about 300,000 tons more than the market size right now.
And an interesting grade.
An interesting grade, 28%. So it means that the current feldspar that will be produced is enough to take care of the market of the 5 producers. But then what happens to the nearly 1 million of the artisanal miners?
You're going to push them out of their job.
No, they will go and buy from Atlantic Lithium because that's 28%. And the higher the grade, the cheaper, because there are a lot of impurities there. So by this December, we are already getting to know. Okay, next week we'll get a full report that will tell us the market size. What do we do?
Right.
And then it is stated that you will not export feldspar and kaolin. Nobody is talking about that. So let me take you again back. Are you now beginning to see the reason why Kwame Nkrumah established a ceramics factory? Because they knew these things were there. So that's number 1.
All right.
Number 2, something. You don't just get up and say, let us set up a refinery. You need to do a study to know the project economics. For example, how much it will cost, what's the cost of power, location, all those things. That's what we're asking them to do. I'm also part of the committee, so it's not as if we are sitting alone. Somebody comes to lie to you that it's not feasible. We have given them up to February. Most likely the report will be ready. So by the time they'll be getting EPA permit, by the time we are out of ratification, by the time they'll be coming for us to construction permit, we already know whether or not we can refine in Ghana and what quantity. We already know what we shall do with our feldspar. All these things have been written into the agreement. So this is something that people are not looking at. So it is not loose, and I'm happy as a lawyer you understood it that way. So I don't see the looseness here.
Bright raised a concern. One of the concerns was the discretion given to the minister in terms of the non-exportation of the material. So all byproducts of the mineral, such as feldspar and kaolin, shall be sold locally. Good. We all love to hear this in the contract. And such product shall not, this is express, be exported unless expressly authorized by the minister. But there's a caveat.
Yes.
The minister must authorize it only where there is no demand for the product in Ghana. We know how our duty bearers abuse their power.
Something you have made my day. That is why we are doing this. Instead of us to wait and sit, that's why we are doing this. Because you see, as I said, the feasibility report will be ready next week. So maybe by the end of this year, we will know whether or not the quantity of feldspar or kaolin that will be produced, Ghana can take it on. So if the report says that already, I can see from the preliminary results that roughly what is contained in there is enough for the 5 ceramics. That's why I support the ban on ceramics. Okay? But then my worry is that what about the small scale miners that produce 1 million? So more or less you have already, if this report is anything to go by, more than half what the market can take.
Right.
So what minister will have to do, what all of us will have to do and put our heads together is to ensure that between now and the time they start producing somewhere in 2025, another company or other companies set up to make use of the ceramics. But if you're going to produce 2 million ceramics, you're going to produce 2 million tons of feldspar, and then your market can only take 1 million, then the only thing is to export the 1 million, which we are saying we don't want it to happen. So we are doing the study now, get the results, and then if you need to give incentives to even Ghanaians to use the feldspar, kaolin and coal to produce ceramics and other sanitaries, we'll do it. So it's like we are ahead of our time.
Okay.
So these reports are already taking place.
Right. And Bright, just be patient, hold on there, we'll come to you. But let's go to myth before we also go to Professor Jampo to find out whether still his concerns remain. Because it does appear there's a lot of light being thrown on the agreement so that some of the misunderstandings will be dealt with. People have issues that 65 years of our independent life, we can still take control of our mineral resource such that we have to allow these investors to always come and get the better part of it. So that the prospecting processes, why is it that we can't be heavily involved? And we keep saying it's too expensive. Why can't we be heavily involved? So that, for example, this one, we would have had all the data. You got this data only because of this Atlantic Lithium company, because they did it since 2012. Why couldn't we do this by ourselves? So that we have the advantage of now throwing up the bits and determining what we want to do.
Something, very simple answer. And that's why we're having this small scale problem. Something, you tell politicians, give us money to go and do geological survey, resource geological survey, and I'm talking about for the past 30 years. So I'm not here for this MPP, NDC debate. I'm speaking generally of my experiences for the 21 years I've been in there. So we send money and say, look, give us money, give it to geological survey, they can do the exploration. And the sad aspect is that they have the expertise. They've actually got a new rig now. I'm sure somewhere next week it will be outdoor. So something has started. They tell us that what is the success rate? We say the success rate is 5%. Okay, so it is not easy to tell a politician he should give you $50 million or $20 million to go and do exploration, which
and 50 million is what they have invested
over the years. And okay, we don't need $50 million in a year. I mean, if you give geological survey even 1 million a year, it's a lot of money. Then every year nobody's asking give us $50 or $100 million. Even 500,000, they can start some clay or good somewhere in all these blocks out areas. But 20, 30 years ago, they were seeing like, oh, we have to build schools, we have to build hospitals. So why will it's not as if I give you the $5 million, you find the good or the clay immediately. And then when this small scale thing now moved from 5 to 13 regions, that's when it dawned on us that, look, if we don't do geological investigation, we will never go anywhere. So thankfully, within the last 2 years, I am proud to announce that the monies have started coming for geological investigation. So, Honorable Member, we have, before you will be coming to the Select Committee, we have some budget now for Geological Survey and Minerals Commission. to do geological investigation. But right now, they all understand, including himself, he raised this question at the parliamentary committee. So the inaction was the fact that we have schools to build, we have people are suffering from Guinea.
But hold on. Finally to you.
So it has started.
Finally to you, Mr. AC. What are the odds that a company has spent since 2012 in all of this and invested up to $50 million US? What are the odds if we had to exercise our rights of giving them the first right of refusal to want to open it up? What are the odds? What do we benefit? What do we lose?
It's against our law. The mining law says that once somebody spends his money and do prospecting and he makes a discovery, he has a right of first refusal to apply for the mining lease. So again, the same law protects Ghana, which says that we have the right. Yeah, we have the right to refuse the grant of the mining lease, but then it should be on sound reason. What would be the basis? You should have a basis for refusing the mining lease. In this case, we don't have anything like that.
Okay.
So what we can do is to impose a condition and say we are giving you the mining lease, provided you do X, Y, Z. So that is it.
Right. Now let's go to Edward Koranting, the Chief Executive Officer of the Minerals Income Investment Fund. Thank you very much for your patience, for staying with us. The issue that is being raised include that you could have gotten a better deal. You have 2 seats on the subsidiary, on the board. You have 1 seat on the international global company, but that may not mean much. Again, you have already started talking about making gains. How do you explain that? Gains from what? Please unmute your mic, sir.
Good morning, Samson, and thank you for the opportunity. A lot has been said. Let me start with the self-congratulatory bit that my good friend Bright mentioned. I think it will be a bit disingenuous to say we were self-congratulatory. I think we need to put things in proper perspective and in context. And what we were explaining was how we got to that valuation and to give an indication of the gains made so far. This is a listed company. There's definitely the risk of shares going up and down. The risk of volatility, which Bright himself indicated, is clear. It's a clear and present danger. And even adding value to the investment or to the company's profile in terms of the lithium resources, we will push the share price up. So what we indicated was to put it in context that we had a low strike price in terms of valuation using a 15-day weighted average to arrive at purchasing the investment or purchasing the shares at $0.2598, which is 20 pence, and seeing the graph move up a bit, irrespective of the fact that the share price fell from 60 to 31. So we need to put that in context, and it was not self-congratulatory push. I think it's too early for that, as you rightly said. In terms of taking more or gaining more, I think it's important that, and also for listeners to realize that we always have to really play on a tight rope when it comes to these investments. We're a sovereign wealth fund. We're also trying to bring in investors into Ghana, trying to get into co-investments, going into partnerships, going into bilateral arrangements that will augur or garner value for the people of Ghana. So pushing too much and getting 3% and asking for more than 1 board seat or getting 2 board seats for a listed company is not really the norm when it comes to global investments. Even getting the 1% for 3% stake is somewhat unusual, but we had to negotiate hard together. And it's important that we have a panoramic view of the workings of Atlantic. And that's part of the reason why we went in for the holding company shares as well. It is also important that we piggyback on the Atlantic in their quest to look for other resources in other jurisdictions outside Ghana. So the 3% is a start. Like you said, we could increase it as time goes. But the most important aspect of the investment is what Honorable Kwamina mentioned, and that's the local asset. So the local asset is where we put in, we invested a greater chunk, which is about 27.9 million, giving us 6% of the local project. The holding company were able to negotiate warrants at a fixed price, and Bright rightfully mentioned it, and we have it's an option. Whether we exercise it or not depends on how we see or how the trends go. So it's a question that has been asked, why we've not gone for more, but it's a very fluid situation. As you mentioned, if it's a commercial entity, we could still continue buying more shares, selling more shares, and so it's a very fluid situation. For me, I can assure you that it being listed, there's a possibility or there's a chance of us increasing our stake in Atlantic Lithium.
We'll be happy to learn about the gains you talk about already being made. I hope you're online. You're still with us. Are you? Hello, Edward.
Bye. Yes.
Hello. So yes, I'm going to ask you to talk to us about, explain to us the gains you are speaking about already. But you are making a 27.9 million USD investment in Atlantic Lithium. Is that correct?
Yes, we're making 27.9 million in the local asset, Atlantic Lithium. Yes.
Great.
So the total investment
is
32.
Great. Yes. Help me understand. Why does the resource owner have to contribute investment sum in order to gain equity? The whole explorable or exploitable resource belongs to us, Ghana. So our equity derives from the ownership, isn't it?
Well, to some extent, yes. And I think Martin has sort of alluded to that, and Honorable Kwamina Donkor has mentioned. That's why the carried interest comes in. And again, it goes to my point of us being careful when it comes to these transactions. Rightly mentioned the geopolitical aspects. You can't say that because the resource belongs to you, you push aside those who have made those heavy investments and take stakes like 55%, 40% for free. You need, as a sovereign fund, as a commercial entity like ours, to come in on commercial terms. What we are doing in terms of commercial terms is still increase the stake for the people of Ghana. Anyway, MIF is still 100% Ghanaian owned. But we can't just claim that because the resource is here, beyond the free carried interest or free carry interest, we should use MIF as an engine to take more or grab more from the investors. I think that will send a very bad signal to investors. At the end of the day, we sit here and say that we want to be like Dubai, Singapore, Australia, etc. It just didn't come by chance. It didn't come through nationalization. It came through correct and well-meaning bilateral arrangements, co-investments, attracting foreign direct investments into the country. And this is the role that MIF can play in sort of directing the country towards reaching some of these goals. So we must be careful because when we make such statements, it smacks of attempt to nationalize. It's never worked, especially in our history. I mean, you hear Mexico, Chile working on nationalization, and I get calls that why is Ghana not moving towards nationalizing our mineral resources? We saw that in the 70s. It never worked. Right was right. There are about 36 mining companies.
I've followed.
Also, but what happened to these companies?
I have followed Amanda Hassas. I don't know if that's the correct pronunciation. I've followed her. That's the director and secretary to the company. I've followed her in interviews abroad. And she's clearly, the Atlantic Lithium, they are leveraging on the Sovereign Wealth Fund to also, come and do this business. It's not as if they are the ones bringing the money. She speaks about having gotten at as many as 30 to 40 off-takers. And you can clearly see in the interviews that they are selling. So you are the ones helping them. You can get better.
I'm trying to understand your point, but it's actually a positive for Ghana, and that you have these international companies. I'm talking about how they're able to de-risk their investments in African countries because of support from sovereign wealth funds. I mean, that is part of what we do anyway. What we do, or what we're trying to do, is to help FDIs into the country by providing a de-risking mechanism through co-investment. So if she's leveraging on that and it's helping the company, so be it. At the end of the day, we are investors in the company as well. But we must also note, and I think you mentioned it, that irrespective of they having 40 off-takers, etc., MIF's agreement with Atlantic includes us taking up to 40% of the initially we're initially negotiating at 50%, but taking up to 40% of the lithium produced by Atlantic. Must also put in proper context that Atlantic is about 15% of the total tenements that Atlantic Lithium holds in Ghana. Then we must put it in context at variance with what Bright Simmons mentioned, that Atlantic is a very small company. Ewoya is number 10 in the world in terms of prospects. And if you just allow me, let me just give you a bit of a brief. When it comes to large anticipated production capacity in Africa, Ewoya is number 3. When it comes to largest developer by anticipated production capacity, Ewoya is 5th. When it comes to largest anticipated production capacity globally, Ewoya is 10. So it is important that whilst we are pushing for beneficiation, whilst we are pushing for the value delivery process to be intrinsically Ghanaian, it is important too that the global investor or investment community sees Ghana as the right place to bring its investment, because they have an entity like MIF that will cooperate, that will co-invest, that will help with de-risking. But the most important thing for us to have the policies, the guidelines, and the laws that will ensure that Ghanaians benefit more. And that is why we negotiated the Ghana Stock Exchange. That is why we negotiated the Community Development Fund. That is why we are taking 40% of the lithium process that we can leverage on to bring in other investors to set up processing plants. We've signed 2 or 3 MOUs already. We are looking at how MIF will also have an equity stake in these processing plants. So we need to have these discussions, but it's important that we take things in proper context.
Right.
Thank you.
Thank you very much. Thanks for spending time with us. I suppose you already have explained the questioning as to the gains you were suggesting you have made, correct?
Yes, so I think I did. We bought at a certain strike price based on a formula agreed with the company after quite some months. And following that, there's been an appreciation. It was just to let the world know, or to let the media know, how we valued and the point of purchase and the gains, because someone requested or asked the question whether we made any gain. And I even indicated that we made a gain, but we've not sent any money yet. The reason why we say gain is because we've actually locked in the agreement. So even though we are yet to transfer funds, the gains, more or less inextricably has been made. It was just to explain to that journalist that yes, some gains have been made, but we've not transferred any funds yet.
Thank you.
The agreement is sort of locked in.
Thank you very much indeed, Edward. Thanks for joining us. Now, I'm going to bring on Professor Gyampo to let you hear directly his concerns, because he has been speaking to the people in Ewoya, the chiefs in the area, and they insist. I'm sure you have heard the language that he has used, that it will not happen. Let's see if, having listened, having read over the period, they can now tone down. But hold on, I want us to go to Bright Simmons. Hello, Bright. Hello, Bright.
Samson.
Great.
Thank you. So I have very specific responses to the Chief Executive of Minerals Commission.
Yes, let's make them very quick.
Okay. Having listened to him, I actually get more worried about advice that the minister is getting. And I'll explain in a minute. So give me a second to share my screens. Either he misunderstands the points we are making, or he's consistently trying to, engage in this kinds of, as far as I'm concerned, unobjective analysis that for someone that is is a member of the civil service, I think he should restrain his enthusiasm about some of these things. Let me start with the point that he makes about Zimbabwe. So here is the law that we are talking about. The law that we're talking about is, I hope you can see my screen on your side, Samson.
My producers, yes, we have it now.
Okay. So it's statutory instrument 5 of 2023, and it's the base minerals export control and unbeneficiated base mineral costs for 2023. So anybody can go and check and take a screenshot and go and check. They describe base minerals means coal and all other minerals and mineral substances, and includes coke and all other slimes, concentrates, slags, tailings, and residues, and are valuable and contain base minerals. But they do not include precious metals, precious stones, mineral oils, and mineral natural gases. So if the chief executive had actually taken the time to look at the law, as opposed to, skirting on the surfaces, he would have realized that concentrates are mentioned. So I don't know where he got, the information that he just shared with the public. But as a senior civil servant, he should be extremely restrained in his enthusiasm in the way that he engages civil society. This thing where he has this combative posture, he did the same to IEA, it's not going to help him, to be entirely honest. He should be objective. He should provide information that he thinks is in the public interest, and not seek at all times to play this political game of trying to antagonize civil society.
Right, but where he has to acknowledge and say there's praise due for some criticism, he has acknowledged that. And even before they made their statement, remember what the minister himself had said. The minister said that government welcomes the extraordinary public interest and scrutiny of this mining lease, because it's the surest way of ensuring that things are done right.
Okay, I was a bit overboard, I guess, in the way that I described it, but we don't get the impression from him, from the chief executive, that he's interested in any kind of consultation. The attitude that we get is that he's not very keen on consultation. He knows it all, which is fine. But the point is that he should read the law carefully. It describes what base minerals are. And then when it goes on to then do the beneficiation and all of those matters, the base minerals dynamic, then placing.
With that point made, let's go to the royalties, historic 10%.
Okay. Then on the issue of the royalties, his point is that even though the law that existed from 87 onwards allows the royalties to clearly exceed the 10% that we've got in this deal, most companies don't pay. That's not an argument. Companies may not pay anyway. If the company that we just signed this lease with, Atlantic Lithium, does not go on to produce for any reason, the fact that we have it in the contract doesn't mean they will pay.
Okay.
So whether or not companies will pay is a factor of multiple economic dynamics. And we have situations where Ghana has had to go to court because specific companies like Duncan Continental did not pay royalties, even though we had it in the contract. So to say that if it's in the law, it's different from if it's in the contract, and if the company ends up not paying, then it doesn't make a difference. That's not address the point that 10% was not the highest we've ever achieved. We've had regimes where we've achieved more than the 10%.
All right, Bright.
So that point is very emphatic. On the next issue about the nationalization.
Yes, and that will be the last. And that will be the last reaction we take. Yes.
No, I have one last point, which is also very important, but I'll do it in 30 seconds. Regarding the nationalization was in the 70s, when we then eventually decided to liberalize. we still maintain equity that was way above 13% in the 80s. So it cannot be the case that the current 13% is the highest we have. The data is there for everybody to check. Last point, that even that we didn't have data, I think is the most important point of all. That we didn't have any data at all. And so all the data we have on lithium, it's backup is for that come from Atlantic. Correct. The lithium data we have in this country date from actually there's a mistake on the page, not 2016. It dates from 1916. And from Kitson, etc., we've always known that the Cape Coast sedimentary basin, that whole area, is a granite complex. We call it the Birmingham complex, and that's hematite and liquid. Those minerals are associated with lithium, and that's actually why the company, when they went there, decided to focus on the Cape Coast and Southern area, because that is where we know from the beginning that we have data. India has never produced lithium on lithium. It's already doing auctions and tenders.
All
so
right.
You don't have to be producing before you do auctions and tenders.
Interesting that we have had lithium data in this country since 1916, and the Minerals Commission, the government apparatus is completely unaware, and this will be the first time it is handed one. That is very, very interesting. And we take a quick break. Bright, thank you very much for joining us and spending your time with us this morning. Thank you very much. Bryce Simmons is Honorary Vice President, Imani Africa. He and Edward Coranting, Chief Executive Officer of the Minerals Income Investment Fund, take leave of us. Thank you very much. We'll take a quick break. We'll be right back.